7 points. Joining us now with more on today's moves and how to invest in the current environment are Lee Munson, Chief Investment Officer at Portfolio Asset Management, and Michael Yoshikami, President and Chief Investment Strategist with YCM Net Advisors. Welcome to the program, gentlemen. And Michael, let's kick things off with you. Today's market, is this an indicator that we're going to see more fear going forward, or is this sort of a blip?
No, I think we're going to see more fear. I think the market's had an amazing run, and I think it's probably ripe for a bit of a pullback. You know, it's not going to be a straight-up market. We certainly are starting to see signs that the economy is stabilizing, but I don't think we should get too far ahead of ourselves. I think the market is stabilizing, the economy is stabilizing, but as you just mentioned with Bill Gross's comments about the AAA rating of the United States, unemployment, there's still many issues out there. So we're going to have bumps for sure.
Lee, the question is, what does stabilization look like in your view?
Well, I don't think we're going to stabilize at all. I think that there's two things that you have to look at. The first thing is look at the utilities. I'm looking for a break in the Dow Jones utility average of about 320, 325. We got very close today. But I think a lot of the news that is not being reported in the Western press that you're seeing in Asia is that last couple of months there's been huge supplies of iron ore getting shipped to China, but yet we're not seeing much demand for it. There's a lot of noise here in the United States about cap and trade, and I think that's just noise. I think the real issue is that there's no demand in China. The Chinese government earlier this week said they're going to start fining companies if they don't start cutting capacity. So I still think we have capacity issues. I don't think June is going to look good. I still think the dollar's weak, but I wouldn't chase it down here. And the bottom line is, we're lightening up. Even our consumer staples that we've been very high on, done very well. We're putting tight stops. I blew out all of my Pepsi. All of my Unilever is gone. And we've been raising a lot of cash. So I think we're going to be in for it for a little while. And I think it's going to be 2010 before we really start rocking and rolling again.
Michael, Lee's point about Asia is interesting. It's something that Alec Young of S&P brought up earlier today as well. This question of, is it really to be believed? Is China really this story that is a growing story, a demand driver of commodities? And is this reflation trade that we've really seen drive up the markets here since the March bottoms, is that to be believed? All right, well, I'm sorry, I'm going to have to just stop there before you answer my question. We have breaking news out of AIG, and Mary Thompson has that.
Rebecca, news out of AIG is that today the company's chairman and CEO, Edward Liddy, has informed the board of directors that he will step down once the board has successfully found candidates to replace him for both of these roles. He has suggested that they have a separate chairman and CEO. That is a practice that would suggest good corporate governance, or is one that is in keeping with good accepted corporate governance. Working with the board, Mr. Liddy has determined that coincident with the reconfiguration of the board, which will happen on the company's annual meeting on June 30th, that the company should also initiate the necessary actions, and I'm reading from the press release here, to install a more permanent leadership team and structure. You might recall that Mr. Liddy took over AIG in the fall of last year, working for a salary of $1 a year. He underwent, I should say, some harsh criticism from Congress in the wake of that, even though he was not at the helm, of course, when the problems at AIG went down. So again, AIG announcing that Mr. Liddy will step down once the company's board has found a replacement for him in the roles of both CEO and chairman. Back to you.
Thank you very much, Mary Thompson. And we got Lee's sort of outlook and what you're doing right now, Lee. And before we go, Michael, sorry we had to cut things short with that AIG news, but how are you positioning yourselves in light of today's activity?
Well, I think what you need to do is drip back into the market. I think if you have a lot of cash, it's time to drip back into equities, play commodities, the Monsantos of the world, even infrastructure names such as Caterpillar. And as you mentioned before, we went to the AIG story. China's growth, it's a little suspect at this point simply because they are basically replenishing stockpiles, but they are going to be a driver, and I think they are going to lead us out of the economy, so I don't think you should avoid that market.
Lee and Michael, sorry we had to cut things short, but appreciate your thoughts here today. Have a great one.
Thanks, Rebecca.
Thanks so much.
Here's some of the other stories.